Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Up only.
All right, then let's say commence. So the many people that came to watch this will have seen that the video that we put out and did not show either of the people that were coming on the call. And CZ says he just saw it beforehand, but Sam hasn't seen it. So if you're turning up expecting to see that, we're going to rug you in advance. There's no UFC fight. There is no Com Rockets and Milky Bar sponsored fight happening today. But we do have CZ and Sam, two absolute kings, titans of the industries, and I guess the CEOs of the two biggest exchanges by volume. Is that correct? Am I being fair?
Close. CZ is certainly there. Hopefully we'll be there soon. Open interest maybe for us.
All right, two biggest by open interest. There we go. We need, as long as we've got a metric, we're good. We've got one metric, the biggest by. I think there's tons of stuff to talk about over the call, but the first thing I want to know is I need the origin story for both. Like Binance, FTX, how did they begin? How did this come around? How did you guys get into crypto? Give us the lowdown from day one.
You want to go first?
Sure. I mean, I got into crypto in 2017 because, basically seemed like there's likely to be a bunch of good trading there. And in the course of that first year trading, basically just felt like there's a huge opportunity in the exchange space and particularly the derivative exchange space. It's a huge part of the crypto ecosystem, obviously. Exchanges in general are, derivatives are more than half of the global volume. But despite that, none of the derivatives exchanges at the time really had their shit together. And, it was just this sort of massive opportunity to be sort of, an initial player in a huge part of a hugely growing ecosystem and to hopefully move the space forward a ton. We thought we were probably going to fail when we launched FTX. Our guess was that we would build a good product and no one would ever use it because we didn't, I'd never run a customer-facing business before. I had no idea how to get users. But it just seemed like a big enough opportunity that it was worth doing anyway. And so, started building out late 2018, launched spring 2019. And, I guess the rest is history there.
Cool. For me, I think I got into crypto in 2013. I really sort of jumped in end of 2013, early 2014. And then running crypto exchanges is not a new idea in crypto. I think almost everybody I talked to in crypto had the idea at some point. So I worked at a couple other crypto exchanges first. And then by 2017, we thought the timing was about right. We want to take a shot at it. And again, I'm same with Sam. I didn't know if we're going to be successful or not, to be very frank. We just said, well, let's take a shot and see if it works. And at the time, I also felt the existing exchanges had quite a lot of room to improve on, especially in terms of customer service, product speed, stability, etc. When we started in 2017, most of the exchanges are unusable on half of the days because of the volumes too high. So we thought we could improve that. Unfortunately, we're seeing some of the same problems again today ourselves. And that's how we started. And then I think in 2019, Sam and I actually talked about starting potentially collaborating on futures exchange together. Somehow it didn't pan out, but we actually ended up investing in FTX, and that's where we are today.
Wait, so you're the first investors in FTX?
Yep.
Yeah.
Holy shit! Does everyone know this already, or is this like some massive alpha just been leaked?
No, that's
no. It's been public.
Yeah. Oh, I thought we got I thought maybe I just revealed that I never do any research and I know nothing. Fuck. All right, so that means one day Solana and Binance Smart Chain are going to move together to make Binance Solana Chain, which is also known as Banana Chain. All right, so So those are the origin stories. And was it OKCoin that you were at back when OKCoin was like also the highest volume exchange? Am I remembering that right?
Yeah, so I joined OKCoin in mid 2014, and back then they had about 30 people. We grew to about 200 people ish, and when I joined, they were kind of expiring exchange, but then we grew that grew quickly. So yeah, so I spent about just under a year there, and that was that.
Yeah, I remember trading on the OKCoin futures. It was the first crypto like trading platform that had an app that actually worked and was like a reasonable user experience. So I remember that quite well. Do you think it's Sorry, go on.
So on that point, so I joined OKCoin in May 24th, 2014-ish, and then we launched futures in July. And that's actually the first futures platform. That's before BitMEX. That's certainly before Binance, and then later on FTX futures. That was way back then. Yeah.
Yeah, I remember talking in TeamSpeak, and it was called the wood chipper back then because the volume was basically flat. The volatility was basically flat, and everyone got used to trading on like 10, 20x leverage. And when it started moving again, it was named
on the
the wood
leverage
chipper.
Conversation. And I apologize, I have no idea if anybody can hear this. On the leverage conversation, why did y'all approach leverage the way you did? Sam, y'all pretty much introduced it right away, but CZ, I know y'all had a lot of pressure to introduce margin trading and leverage options, but you waited at least, I think, 2 years and introduced it during the bear market, right? So what went into your decision making there?
Okay, so I'll go first. I think come 2018, we went into a bear market, and the market wasn't that. After we went into a bear market, it kind of stays flat, and there's not a whole lot of volatility. The spot market become less interesting. But to be honest, we actually took 2 years for us to get the spot market together. So everybody saw that we went to the number one spot market in 6 months. But what's behind the scene is we were struggling on our systems all over the place. So we actually took about a year and a half to revamp most of our systems in 2018 and 2019. So we were busy with that. We were actually scared of another bull run because if a bull run comes, our systems couldn't handle it back then. So now we're seeing a bull run, and we can mostly cope up with it. There's still hiccups here and there, but we're actually handling that volume. It's actually not easy given the number of users we have. It's actually a pretty big challenge. So finally in 2019, we thought, okay, we have some spare capacity. Our team size increased, and we just finally got around to having the capacity to do it. And running futures is actually pretty tricky. You got to do a lot of risk management. You got to make sure you have enough liquidity, or you have to provide your liquidity yourself, which is what Sam and Alameda is doing right now. So it's actually very tricky. We didn't have a lot of those. We didn't come from a trading background, so we didn't have a lot of those features before. So it took us quite a while to get prepared for it.
And what about y'all, Sam, in terms of why and when?
Yeah, I mean, I think that sort of one of the founding principles of FTX was the sense that a lot of exchanges were not doing a good job with margin, that it was really central to the space and what was driving, that more than half of the volume was happening through futures. And so that was sort of one of the core initial value props of FTX was a rebuilt margin engine. And so that was sort of the first product that we came out with. And I think for us, we very much, saw our spot market as something where, we thought there's some innovation we could do, but that there's less design space there than on the derivative side. And so, that a lot of the growth that we're going to hope to get on the spot side was going to come because of people who, came for the futures and stayed for spot. And I think that is sort of what we've seen where, we now have decent volume on the spot side. They're not anything close to what Binance has. But, a lot of that is volume that's just grown out of, people who came for the derivatives. So, I think that was, really where we kind of got started. And, as CZ said, it's not easy to do this in crypto. And I think one thing that people underappreciate when they compare crypto exchange stability to traditional exchange stability is that crypto exchanges are doing a lot more. They're not just the matching engines. They're also the risk engines and the clearing and custody and balances and everything else, which means that, when you're processing orders and fills, in line, you also have to be managing, all of your users' risk and things like that. And that makes it a computationally much more challenging problem. And it's a lot of the reason that you do see, a lot more effort going into it and a lot more struggles being able to keep up with that.
Do you think that there is a good reason for leverage beyond like 3 to 5x, or is it all marketing? Because my biggest beef, to be quite frank, with both of your platforms is that people genuinely just destroy themselves on high leverage. And I don't understand why it's needed in crypto.
I don't think it's obvious it is needed. I think that I think, as you said, 3 to 5x is sort of like the more economically reasonable zone. And I think that, beyond that, I don't think that there's like a ton of that. We don't allow large positions on higher leverage than that. If you want to put on a sizable position, you are going to be restricted to something like that. But another thing that I'll say is that FTX doesn't have a ton of liquidations. It obviously has some, but relative to its volume, it's usually at the bottom of the pack. And I think that's for a number of reasons. I think one of that is sort of the risk engine and trying to do what we can to avoid liquidating when we can. I think part of that is just sort of the ethos that we've tried to foster amongst users. But yeah, I think this should be fine if it got rid of leverage above 5x, at least for initial. I think for maintenance, you want to give people a little more room.
Yeah, I think on Binance it's pretty similar, to be honest. The high leverage is only allowed for very tiny amounts. So if you want to do like $500 on 125x, you can. But if you want to do like $1 million, you can't. So at the high positions, the leverage comes down quite quickly. So it is a little bit of a marketing gimmick, to be very frank. It's like the pixel counts on digital cameras. BitMEX does 100x, so FTX does 101x. We thought that 125x is more divisible by 8, so we went there. But we don't really allow very high positions on those high leverages. And we also see that most people's leverage is somewhere between 3 to 20x. Most people don't have a really like higher leverage than that. And also same thing on Binance. Given the amount of open interest and the amount of volume that's traded through Binance futures, like $100 million per day in the last couple of days, when the market took a really sharp drop, we actually had relatively minimal liquidations. So we do monitor our liquidity quite carefully, and to make sure that even in relatively extreme events, our risk engines, our risk processes are there to handle it. So compared to some of the other exchanges during the last 2 days, our liquidation is actually much smaller, given though usually we have much bigger volumes. So the high leverage is a little bit of a marketing thing, but it's actually not used by large traders. It cannot be used by large traders. Brian, I don't think we can hear you now.
Yeah, it was just me. Do you think that the success of the exchange, though, depends on at least offering that? Like, that's what people demand?
I don't think it's super crucial to it. I think we'd be fine if we stopped offering it, to be frank. And I don't think it'd be crazy for us to do it. I think if we went below, 5x, I think we would lose, significant volume, because I think that's something that makes economic sense for a lot more users, and that they do take a lot more advantage of. But I think if we limited it to 5x initial and 20x maintenance margin, I think it would be like mostly fine for users.
Yeah, I pretty much agree. Yeah, I think the above 125x is probably less than 1% of the volume.
Yeah, Cobie,
we actually charge an extra small fee on trades above 20x as well, to sort of like compensate the liquidation engine, because it's hard to consistently liquidate. There's not a whole lot you can do about 1% gaps, and so we sort of trying to actively discourage that a little bit too.
Yeah, I want to add though, there are some trading strategies which can make money on the 125x. So they basically split the portfolio into 125 portions, and they try to trade 125 times. Most of the time, they get liquidated on that fixed amount, but that's only like, I don't know, 100, less than 100 of their portfolio. The time they hit, if they can hit a bit, if the price rises more than 1% or even like say 2%, then they make all of those losses back. So a lot of people do deploy a strategy like that. But for strategies like that, you really got to limit your position size. So sizing matters quite a lot in risk management. There are strategies that work with those high leverages, but overall, those guys can't have big portfolios. If you have like millions of dollars, you can't do that. The market don't let you do that. The market is not liquid enough potentially. So there are some small players who do that. So some people do use it.
Yeah, I think that's where I have a struggle. Cobie, your audio is not working. I don't know why. Oh, there it goes.
Can you hear me at all?
Yeah, now.
No?
Yeah, now it works.
Oh, that's weird. Do you think it's a surprise, or you think, like, what do you think the core reason is behind a lot of the biggest exchanges? There's like it all being like pretty new. Like, you were founded at a similar time, right? Your companies were started at a similar time. Your exchanges were built over a similar period, and now you're two of the most popular exchanges. And it seems like the earlier exchanges, they lose relevance and drop volume. Do you think that's what do you think the core thesis behind that is?
I mean, I do think that a number of the early exchanges are still quite popular. I mean, Coinbase obviously was one of the first ones and is still a big name. And you do see Cobie, Bitstamp, Bitfinex, and others still with relevance. But I think that one piece of this, which is pretty relevant as well, is that a lot of the earlier exchanges, the problems that they run into is that they sort of came about in a less competitive environment when there was, less work being put into the products, and the products frankly weren't as good. And that was sort of what the competitive landscape looks like. And I think, the risk for being an early platform is that when when sort of, the ecosystem grows a lot and the standard that you have to hold yourself to be competitive grows a lot, that they're, not able to keep up and weren't sort of founded in a period where they had to keep up to prove themselves.
Yeah, I think for any industry that's relatively early, in their first 10 years, you're going to have a lot of people who are there for the startups, who are early adopters, but may or may not have the right experiences or to build a really long-lasting product. I think as Sam said, there are some exchanges who have lasted through the years, but there's many that, for example, Mongox was built by Marco Palace, who used to run a trading card platform, which is very different from a financial trading platform. And as such, apparently that he was storing private keys on piece of paper, and he never checks those wallets, and he just counts deposits, and then suddenly he discovers he's out of, like, I don't know, a million Bitcoins. So those kind of things happen in the early days in the industry, and also the industry evolves very quickly. So the earlier, say for example, if you look at exchanges before the 2015 era, they were all just Bitcoin exchanges. So it's really just fiat to Bitcoin. Ethereum was a new addition to many exchanges in 2017. So up to 2017, many exchanges didn't have Ethereum. Some exchanges had like Bitcoin and Litecoin, and those were the two. But then many of them didn't have the sort of even Ethereum or ERC20. And then Ethereum came along 2017, the ICO days, and that's when Binance started. So Binance, we understood very, very quickly that we need to support a large number of coins. So that's how we engineered our platform. It took a number of years for the other exchanges to adapt because they had existing architectures they need to carry over. And then many of them are focused in one country, because if you're doing fiat to crypto, you're usually doing one fiat. If you're doing that, then if let's say, look, there's two popular crypto to crypto exchanges that are in the US. They only had English interfaces. They only had the web interface. They don't have mobile apps. They don't have multiple languages, and they don't really have very good customer support. So when the industry changes, things evolve, and it gives opportunities for newer entrants to do that. And then when DeFi happens, that allows a new set of opportunities for new entrants to come up. So now we have Uniswap, PancakeSwap, etc. We also give opportunity to Binance Smart Chain.
I really want to dig into that in terms of the DEXs, because I want to know you've talked about this some before, CZ. How can you destroy your moat, or do you destroy your moat? And how can you set yourself up to live in a hybrid environment where people are trading on DEXs and using centralized platforms?
So I think basically, I think Steve Jobs said this the best. You got to disrupt yourself, or somebody else is going to do it for you, and it's much more painful in the later scenario. So if you disrupt yourself, at least you have what's disrupting yourself. And there's another way of saying that, or there's another saying, which is there's always more opportunities in the future than there were in the past. So if you were successful in the past, you probably will be able to catch other future opportunities that has not materialized yet. So my belief is, as long as we have strong execution ability, we should not be afraid to disrupt ourselves. To that end, Binance offers a centralized exchange. We have launched Binance DEX in 2019 and a Binance Chain, and we did that one isn't so popular. It's still used. There's still decent volume, not huge. And then we funded another offering, Binance Smart Chain, which actually took off in a big way, again, to our surprise. And now there's a number of DeFi projects blossoming there, and we're looking to get more involved to support them, giving them grants, giving them funding, and also looking to invest in some of them, etc. And our NFT platform, we're launching both at the same time. Again, we're launching a centralized custodian NFT platform, and we're launching a on-chain NFT platform at the same time. So we want to like, we're not really, so many people, I don't know why, have the misconception that we really focus on the centralized exchange. That is where I spend most of my energy. That's because that's where I have experience, but we're not married to centralized exchanges. I'm more than happy to do decentralized projects, etc. So I think in the future, for anybody to be successful in this world, you got to be ready to disrupt yourselves, and you got to be very aggressively wanting to disrupt yourself.
How do y'all approach that, Sam?
Yeah, I think largely feel similarly that you can't spend your life afraid of new things that might come in to disrupt, or you're gonna you're gonna be disrupted, and you shouldn't be afraid of new products. If you think that they offer something cool, you should be building them. And if you don't think so, then you shouldn't be scared of them. And I think that the way I see it, I think centralized and decentralized exchanges are different, and I think they have like different strengths and weaknesses. And I think that like there's a lot of things that it's never going to make sense to use DeFi for, because it's like heavily constrained on latency, or on throughput, or on iteration. And that on the other hand, there are a bunch of things that do fit really naturally into DeFi. And I think for those things, it totally makes sense for them to be living on chain. And so I don't even see them, so much as competitors as I do, as products that just make sense in different cases.
Both of your exchanges are like large supporters of an Ethereum alternative, like layer one, right? And it's quite interesting because Binance, you support the Binance Smart Chain ecosystem. It's like EVM compatible, lower fees, and etc. Through different compromises. And Sam, you're obviously a big supporter of the Solana ecosystem. How do you think this sort of dynamic plays out? You both have the same problem with Ethereum and look for different alternatives. And it's particularly interesting, I think, with Binance, where a lot of people's first ever blockchain is Binance Smart Chain, because a lot of people are hearing about crypto through Binance marketing, or their friends saying sign up to Binance. They sign up to Binance, and then they end up on chain, through the app, and then on chain onto BSC, and like they don't even know what Ethereum is. So I'd love to hear some of your thoughts on that.
Yeah, I guess from our perspective, like I think scalability is super important. I think this is probably something Susie feels pretty similarly about, that, looking at trying to build out a huge centralized exchange, if we sort of chose, one rate limit, one transactions per second limit for FTX a year and a half ago, and made that immutable, we'd be fucked. We've constantly had to keep scaling that up. And I think what you have to do is look at not where you are, but where you want to be. And what you need to get there. And I think that if you look at the most ambitious version of DeFi, I think it's something that has, 1 million transactions a second going through it. And so I think that, if your platform isn't going to be able to support that, you need to think hard about why that's the platform you're using and about whether something has to change there. And so I think that's sort of the biggest thing is just like, scalability is really, really important to get right. And it's sort of make or break for whether something can become huge. And I think that you see that in terms of throughput, and it's the same thing in terms of transaction costs, because you're just auctioning off too few transactions, too high demand otherwise. Obviously I've been, active in the Solana and Ethereum ecosystem, helping to build that out. But I do think that this space needs to take scalability really seriously. And I think 3-year plans to 100x the throughput are not enough. I think you need a lot more than that.
To your point, BSC as an example, CZ was designed in a way to make some sacrifices where you have the 20 node operators or however that works to essentially be able to run EVM but have fewer parties that have to confirm so that you can run more transactions through it. But in the dog coin mania, BSC failed to keep up. So what is the scalability plan for BSC? Do you imagine that it could be a multi-layer ecosystem, or would there be changes to the native protocol? What would you do next?
So first of all, I think I agree with that. Scalability is one of the key things many of the innovators overlook. Many of the pure innovators, they want full decentralization or other sort of more nice sounding features, but they overlook scalability. So very soon the network is saturated. Today, both the Bitcoin and Ethereum network are saturated. This is why the network gas fees go very high. People are basically bidding for the spots. So there's been many attempts on the scalability front, many different attempts. We actually did attempt to solve the scalability issue with Binance Chain, the sort of the chain that we released. The older Binance Chain we released in 2019. But we found the problem there is, in addition to scalability, there are adaptability or I guess what you call migratability issues we have to think about. How do you get the ecosystem to migrate to your chain, which is a pretty big important factor. So that's something we try to address with Binance Smart Chain. Well, actually, that's something that the Binance Smart Chain community or team tried to address with that. And they did a really fantastic job. So a lot of design decisions actually almost all of the design decisions were not made by me. I learned how to use Binance Smart Chain using the blog tutorial written by Binance.com saying how to use MetaMask. That's the first time I interacted with Binance Smart Chain. And so the way I set up...
That's one of my most popular videos. I should have known because PancakeSwap blew up. But it was just the PancakeSwap founder trying to get people to use it, sending people $100 worth of the token just to get them to try BSC, because people tend to get intimidated by the startup, but once you get in there, you realize how similar it is to using Ethereum directly, right?
Yeah. So for us, for me, when I experienced that, I was like, wow, this thing has some potential. So the most support that Binance gave is mostly funding support for Binance Smart Chain. But Binance Smart Chain, the community took an approach where it's very close to Ethereum. It's very easy for Ethereum developer to move to Binance Smart Chain, so we can solve that migration problem for developers, which is very hard. And Binance did help quite a lot on the user migration side. Binance provided one of the easiest to use bridges. So many projects have to bridge bridge with Ethereum, but many of the bridges are not easy to use. Many of the bridges are somewhere centralized and they require credibility, etc. But Binance, we're already holding custody of people's money, so most people are relatively familiar with us, to the point where Binance Smart Chain is actually now, because Binance.com has many first-time users into crypto, they're more familiar with a centralized exchange. Now Binance Smart Chain is actually their first decentralized protocol. So that worked quite well. Actually, none of that is planned. It just happened that way. So it wasn't like I was a genius and thought about all of this beforehand. It was just somehow it just came together. So we got lucky.
Cobie, what do you have? You're muted again. Brother.
How does it? Is it? But I'm not muted. Can you hear me at all?
Yeah, you just have to do the tap every time. You know,
I got to tap every time I want to talk.
Hello,
right, new feature.
I'm ready to talk.
That makes a lot of sense to me. And how do you both see Ethereum playing out over the rest of the year? Because we've got layer 2 launching, Arbitrum launches in like 10 minutes or 2 days or 10 days or a month or something. I can't remember. But Arbitrum Optimism will launch shortly. You have ZK Sync launching apparently in August, which is maybe optimistic, but it might happen. You've got EIP 1559 coming, and the merge, and like the merge is a bit of a meme, like ETH2 maybe never launches. But as that progresses, how do you see BSC and Solana fitting into the ecosystem, or are you bearish on
on the change that you participate in?
Any of these things are actually real or going to happen? ETH2 remains a meme for the next 10 years.
Yeah, it's I don't know, somewhere in between maybe. I also think that like thinking about what the usability factor of the end product is going to be, look like is pretty key. And I mean, I think like it's not great if you end up sharding between like 17 different ecosystems in the same chain, none of which can transfer to each other easily. And what if you have a single program which is too big for any one of them? What do you do then? And if you're not worried about that, then do you actually have 1 million TPS per whatever roll up L2 GK shard thing you're going with? So, I think it needs to be fleshed out a little bit in terms of what the ultimate vision is there.
Yeah, I'm to be honest, I don't want to offend anyone. I'm fairly skeptical about it. Ethereum 2.0 was supposed to be here last year, right? So it was here last year, but then everyone got excited, but the performance hasn't improved. I think most people didn't understand that it will take years for Ethereum to improve the layer 1 scalability. It's just very difficult to scale a network that's already been widely used. Once the technology is out in the wild, it's very hard to change fundamentals of it. And also taking care of backward compatibility and business incentives like miners and all those other players in the ecosystem that have all significantly invested in infrastructure to support that existing network. For layer 2s, I'm also skeptical, to be honest. The sense that the user experience is going to be segmented among several different pools or many different pools. The user experience is just harder. Layer 2s actually do imply some type of trust, at least even if it's just in the short term, on some other third party. Given the Ethereum community is so sensitive about decentralization, I think that's going to be a concern. So I think basically all of those things are, but I'm naturally skeptical about any new thing. So when we started Binance, I'm skeptical it was going to be successful. So it's not to say I'm really against them, but it's very hard to, 99% of the experiments fail, and only a small number of them succeed. For us, I think I'm actually really rooting for Ethereum to be successful, especially for Ethereum 2.0 to come out with the next biggest, fastest blockchain. I think that would be great for the ecosystem. That may be bad for BSC, the current version, but it will pave way for BSC 2.0, which we can do. We may do something better. It's also good for Binance. Now, if the ecosystem is bigger, then we have more traders. So I actually think that if I'm actually rooting for Ethereum 2.0 to come out and solve all those problems that we're facing with scalability today. But I think it's a very difficult problem problem to solve. And also, the Ethereum guys are very what you call it, very purist. They want full decentralization at a very high speed. Those two things doesn't go very well together. So if they want to run everything on a laptop, handling millions of transactions with millions of laptops syncing with each other, that just goes against some of the fundamental limitations in physics today. So but I hope they solve it though.
So I want to turn 90 degrees to the right. I know y'all don't want to talk about regulation, so we're not going to talk about regulation. I want to talk about politics, okay? Because y'all have taken two very different approaches to what I would call political problems. Sam, you're like a citizen of the internet or something, and it's not Sam. CZ, you're like a citizen of the internet or something, and it seems like your approach has generally been like, look, the internet, y'all are way behind in all these governments, so we're going to do what we do, and then you like try to figure out how can we be regulatory compliant in the various jurisdictions where our customers exist, which I think that's noble. And then Sam, that's popping up in chat. I don't know how to get rid of it.
Oh,
that's okay. And then Sam, for you, you're like Joe Biden's best friend or something, you know, like one of his top donors. So you're taking what I would view as a significantly more, oh my God, political approach. So CZ, why don't we start with you? And like, I want to think, how do you approach what is really politics? The introduction of crypto to the rest of the world is politics. How do you want to get crypto into the broad conversation?
So we try to, as political as it is, we try not to get involved in the politics side of things. So we view this more of a technology innovation. We want to promote technology innovation. So very similar to the internet. Internet can cause a lot of political things. Even today, like what Twitter does probably have a direct influence on politics, elections, etc. What Facebook does, etc. So that will have an impact. But fundamentally, we want to encourage development of the technology, and we want to stay out of politics. I also do have not an internet citizen. I also do have a worldview. I've been living in many different countries. So we don't view one country as our entire market. We view that as one sub part of our market. We can let that go if the regulations are not favorable to us there. So we have done that multiple times in our history, and we have always kept a bigger part of our business, which is the entire world, minus a few countries which have clear regulation or clear or restrictive regulations. For US, I think now US is a good example of a clear regulation, but also not super restrictive anymore. And we have a crypto exchange going on NASDAQ. So that's good. There are other countries which are more restrictive. We respect that, and we just stay off. So we try to stay off that. And for me, it's pretty simple. We don't try to offend anyone. We try to be compliant wherever we operate, and where we can't operate, we just don't operate. And the world is big enough. We don't have to go against anybody or fight against anybody. We just want to improve the technology.
And Sam, how do you? Why did you take the political approach? I guess.
Yeah. I mean, I think there's definitely a lot of similarities, between how I view things, but I think that, in the end, we want to, I think, especially in the most significant places, we want to have a real footprint, and we want to be working with regulators to the extent that is feasible. And, we're starting to reach out to regulators in a number of jurisdictions, just to establish a dialogue. And, I think that, no one knows for sure what the future of regulation in crypto is going to be. There are a lot of open questions. We want to play a role in helping to shape that. We want to play a role in making it clear which parts of, of this are going to be important, and which parts, are going to be things that we need to work with regulators on. And I think, one big example is just developing global crypto derivatives regulation, which is sort of substantially underdeveloped right now. And by the way, I do apologize. I do have something starting right at the top of the hour, so I have to hop off, in a minute.
Yeah, Cobie.
Yeah, no problem. I only have a couple more questions that I think people want to hear from. One is when as exchanges, right? You have obligations to serve users, and users make demands. So I'd love for you to both talk a little bit about the internal decision making when it comes to listing assets like Shiba or things that half of the community will be like, please, we need to trade this. We don't know how to get it. All my friends are talking about it. And the other half of the community are like, really? Why are you listing this like dog shit? So like, how does that decision making go internally?
Yeah, and I think I'll say the biggest thing is you don't have to trade it. For the people who want to trade it, they can, and the people who don't want to trade don't have to. And, that's our sort of default approach, is let people do what they want to do and don't force anything on anyone. There are times when we'll add various quizzes, various tests, lots of informational documents and warnings to various products to make sure that people understand what they're trading, before they start trading it. But when it's feasible, we want to be able to offer the products that people want to trade. So, I actually do have to head off now. I apologize.
No,
but
that's fine.
It's been great, and thanks so much for having me.
I hope that we can get a redux with you whenever we're better put together here. I know we
absolutely.
But
I'll answer the question, and then I'll probably have to hop off too.
And Cobie and I will just sit here and cope after that.
Yeah, for Binance, we just go by number of users. So but even for how to determine number of users is a little bit tricky. Do we look at the number of addresses on chain? Do we look at number of Twitter followers? Do we look at Telegram group sizes? So there's many. Or do we look at code commits on GitHub? So there's many different ways to measure number of users. So we use a combination of them, and we actually don't say how exactly we calculate, because whatever we say will be reverse engineered. But even when we select what we think are the largest number of user coins, most of the coins today, especially the newer coins, only represent a very small fraction of the total users in the crypto space. So that means for most people in crypto probably do not hold that coin. And most people probably hold some other coin, and they're all different. So they're all going to complain, oh, why did you list this shit coin and not the coin I hold, which I think is personally the best coin in the world that you have not listed. So there's always going to be complaints. We can't make everyone happy, but we go by number of users mainly.
Yeah.
Cool. That makes a lot of sense. Thank you for joining us. I think you have a thing to jump off to as well.
Thank you.
So thanks for coming on. Ledger, should we stay on for a little bit?
Yeah, I hope we can get you on another time, and we'll go solo next time and mix it up. I appreciate you being here and being flexible. You were on time. I was not. Thank you so much, CZ. Cobie, stay on. We'll and cope.
All right. Thanks, Brian. Thanks, Jordan. And thanks for having me here. Thanks, everyone, for listening. Yeah, cheers. Bye-bye.
All right.
It's just me and you now, mate.
Yeah. So now
I'll pretend to be Sam, and you can pretend to be CZ, and we can ask each other questions.
Oh, I think that's a good idea. Yeah, let's go.
All right. You ask me a question first. Am I Sam or am I CZ?
You're Sam. I'm CZ.
Okay. All right. Ask me a question.
Sam, what type of conditioner do you use? Your hair is glorious.
I use Pantene Pro V. But the trick is with conditioner is you gotta leave it in. So I shampoo my hair, and then I condition it, and I leave it in, and I just let it dry. So you don't wash it out.
How many round trip trades can you actually do while your conditioner is resting?
I can do about 600 trades per second at the moment since my previous operating system upgrade, but I'm looking for some future improvements and trying to get it up to 1,000.
Are you the operating system, or is it like on your computer? Like, is this like, Sam, yourself? You have software that you're running? You got a little microchip back here?
Yeah.
Can't address this question.
So, CZ, since you're the first investor in FTX, when are you going to put together a hostile takeover?
Well, what you don't realize, dear Sam, is that I've owned you since you began. There's nothing you can do about it. And if I win, I win. And if you win, I win. So good luck over there.
We'll have to get each of them on individually. Honestly, I think we should have streamed the bit where you were trying to set up the stream, because I've never seen you so stressed, red, sweaty.
Right. So, chat, audience, we have, I think, 11,000 people on here right now on the live version. I have all this equipment on my desk, and I'm using none of it because it just did not work like it was supposed to. So I'm doing everything off of a laptop right now, and it's completely wrecked. I'm sorry, but I want to assure you, we're better than this. We can do better. We will do better. Don't worry. We'll be here for another period of time until the market dies. When the market dies, we'll just walk away, right? We'll just like throw everything in the air. It'd be like an explosion in the background.
We've got to do up only streams when the price of Bitcoin is 7 cents. It's been 7 cents for 30 years. We'll still be here. Up only TV. I'm 100 years old.
We're in it for life. Cobie, taking off our Sam and CZ hats, did you learn anything today that you didn't know?
I think the most interesting thing is like both of them started at a similar time. Both of them were considering collaborating on an exchange together. And they take like very similar approaches to a lot of stuff, even though their brands feel very different. I do also find it interesting that like they're both the spokesperson for the exchange. Like they both tweet a lot, and they kind of like the face of the brand. Whereas
percentage-wise, what's the bust factor? What percentage do FTT and BNB go down? Like if they just said they're gone, like if they were no longer going to be part of things suddenly. 50% plus.
I don't know. That's a pretty dark question, though.
No, I don't mean if they like
like a prediction market on the price after their death.
not after their death, but like let's just say they just walk away, right? They say I'm done with this. I've made all the money in the world. I'm going.
I don't think in that scenario it's a big problem because like they're both smart dudes. They're both going to have like proper transition plans. By the time they're ready to leave and they announce they're leaving, like people are going to like be excited about it, right? They're not going to be like wait, what? They're going to have done a comms plan that transitions over and people are going to be ready. There's going to be a replacement.
So what you're saying
ready.
is
So
you and I have like way better of a life than they do because they like have to work forever. Just like to exit,
yeah, like when you're the CEO of like a successful startup turned company, like even if you want to leave, you've got to have like a multi-year transition plan outwards. So it's a big commitment.
You can retire. Are you already retired? Would you consider yourself retired?
Yeah, guess so.
So you can do whatever you want. You're
not retired because you did sell half your business. You sold your successful business at the top to go all in on DeFi.
Yeah, I'm with my new business partners right now. Somebody in the chat asked me if I'm in a Hampton Inn conference room. I'm not staying at a Hampton Inn. Nice try trying to dox my location. No, I'm in the office of my new business partners, which we can talk about at another time about how I'm going all in DeFi. But yes, I sold half my business at the top of the market, so I'm probably screwed now. The 100 IQ play is happening here, but I think we'll be all right.
All right. Well, Ledger, until Thursday, I'll see you then. Enjoy the rest of your time at the beach.
Let me find this button. It's too bright in here. I can't see, so I just gotta... Is that the right music? There we go. That's the right music. Thank you, everyone. Y'all are wonderful. We'll come back. You know what you need to do? You need to subscribe to Up Only TV. Just go to uponly.tv and find your preferred subscription method. This show's pretty good sometimes. Not today, but sometimes it's pretty good. We just decided to choke as strong as possible here on the CZ and Sam episode. I told Cobie ahead of time there's zero chance that we live up to the hype video. So shout out Frexley Snipes, I think that's how you pronounce his name, for making a video that would be totally impossible for us to live up to. With that, we'll catch you next time. I gotta go.